Hello and welcome to Budget Trades, a show wherein we try to tell you what you should as a trader be doing on Monday morning. The budget has come, the budget has gone. The market has reacted on Friday. There is a weekend to digest all that's happened in the budget fundamentally and technically and then decide what to do on Monday morning. And to do that, we've got three eminent experts with us. You see them every day on the channel. The best technical analyst team in the country on ET Now. Ashwini Gujral, Mitesh Thakkar and Sandeep Wagle join us on the show. Gentlemen, thanks so much for joining in. The idea of this show is simple. We're not trying to do some basic analysis of how the fiscal deficit numbers were or what could the FM have done. The idea of the show is to cut the clutter and tell you how are the charts looking for each of these individual sectors or stocks which found some mention in the budget speech, and therefore what are they likely to do as per the charts come Monday morning. Let's jump straight to some of these charts and some of these stocks and start off actually with what the market did. Remember, because on Friday the markets corrected quite a bit post in the last 1.5 hours of trade. So a bit of a vertical drop that came into the Nifty, and that is the key point really. I'll start off with you, Ashwini, on what to do for the markets first off before we talk about specific sectors. A bit of a vertical drop coming in the last 1.5 hours. Is this a dip to buy into the markets, or would you believe that there could be more downside?
Well, markets react differently at different phases to the same budget. Had it been a bear market, rising interest rates, tight global liquidity, this sort of a budget would have done much more damage than it would do right now. Right now, global liquidity is benign. We're in a good, nice uptrend. Our rates are probably expected to drop. So that way, it becomes a good drop to be bought into, a nice little dip. Basically because we are just, about 130 odd points from the recent intermediate lows of about 5170. So as long as that level sustains, it is wise to buy all the dips. I think budget is done and over, and probably latest by Tuesday, chances are we should resume the uptrend. As we can see, global markets are not supporting this fall. So India falling, just on its own is quite unlikely, so the dips need to be bought.
Buy the Nifty is what Ashwini is saying. Mitesh, very quickly to you, what is it that you would do?
Well, I'll differ, I think we've been going through some kind of a short-term correction. My basic idea is of a range developing over here in the Nifty. So while I agree that, the dips should be used to buy, but I would not buy at current levels. So my preferred range would be around the 5,200 mark, keeping a stop below the 200-day average, which is 5170, 5165. Keep a 40-50 point kind of stop loss if you're buying around the 5,200 mark. And my sense is that we might actually go there. So the short term, which is 1 to about 2 days kind of perspective, is slightly negative, slightly weakish, and I would wait for this dip to occur and then buy into it. The upsides would be capped, and I suspect that this will be a range of about 200-250 points. So you might actually get back to 5,400. In that sense, yes, I would agree with Ashwini on buying, but I would just wait it out for a couple of days.
Okay, broad consensus, buy the dips, but Mitesh should probably wait for a day longer. Sandeep, very quickly, what's your sense on the Nifty?
Neeraj, if you are a short-term trader, there is a chance of selling. Sell 25-50 points stop loss, 100 points, maybe 100-120 points downside. But yes, I don't think the swing low of 5170 will be taken out. So nearer 52, 50, that range, I'm comfortable buying. I would like to watch how the market moves there. And it will consolidate for some time over the next few weeks, and then the rally may begin. That is what I would say.
Okay, broad consensus out here. Maybe a bit of a dip, but that could be bought into. Let's get to specific stocks and specific sectors. The big drops of Friday's trade were the oil and gas stocks. ONGC, Oil India, Cairn India, all of these stocks went down in trade. Remember, the sets raised from 2,500 per ton to 4,500 per metric ton. I mean, if you can convert it into dollars, that are from $7 to $12 per barrel. And that really brought set the cat amongst the pigeons. A lot of these stocks fell anywhere between 4% to 5%. Large caps like ONGC and Cairn being the principal losers. Ashwini, a 4 or 5% cut coming in a matter of 2 hours on Friday's trade. What do these stocks do on Monday?
The ONGC may not have a lot of downside because it never really rallied a lot. And it's broadly, likely to test the lower end of its range of about 250, 260. Because broadly it's doing a 50-point kind of range between 255 and say about 295. So ONGC may not drop a whole lot. The one that may drop is probably Cairn, but I think it will find support around closer to levels of about 325. So this is a short call that we have, that these stocks could sulk for couple of more days. I think CAN can be sold with a stop about 355, and you can look for targets about 325 here.
Mitesh, the other two stocks, one is Oil India, which reacted to this news. The other one, wherein the news is positive really, because GAIL, the subsidy burden for GAIL goes down. So fundamentally, there is some bit of positive news as a result of what's happened. But the stock didn't react too well, with the markets went down as well. So Oil India and GAIL, what do you do with these stocks?
Well, Oil India, I think, like ONGC and CAN dropped significantly. It's met the first target of 1193. I think that's the critical support over there in the short term. But the structure has definitely been damaged. And I agree with Ashwini that, CAN can probably fall more, and ONGC will also, I would look for targets of 255 to about 250. That's a trading call also recommended by me. But I think Oil India has met the first target. So now here, there can be two scenarios. One, we get a bounce back, sell it on pullbacks to levels of about 1240, 1250. And once we break 1190, I think 1130 is what I would look for on the downside for Oil India. Coming to GAIL, I think there's still a chance that GAIL might recover actually. As long as the stock is above 355, 360, broadly a good support range, I would look for buying opportunities on dips. We had a weakish session today, but if there's some more weakness due to the market weakness, I think GAIL would be on the buying list, and it could probably climb back up to as high as 375, 378, which was today's high also. And if that is being crossed, 390, 395 is what I would look for on the upside.
Okay, lots more happened, and we'll talk about those stocks. But since we're talking about oil and gas, Petronet LNG is the other one, wherein import duty on LNG was cut, probably on expected lines, and with the markets looking how weak they were, maybe the stock didn't react duly as it would have otherwise. But 162.5 and sustaining those levels. Sandeep, Petronet LNG, how does that look on the charts?
Well, Niraj, I think it is very sideways. I would talk of a range of 155, 156 on the downside, 168, 170 on the upside. And I don't know how much time, how many days, how many weeks it will spend in this range. So I would not go for it. Not to say that it is weak by any means, but it will be sideways over the next few weeks is what my view would be.